What an absolutely amazing up day in the markets today. The S&P up over 1.5%. My investing portfolio up over 3%. Guys, I'm going to make another video and drop it either tonight or tomorrow. It's going to be talking about the huge bet that I made that I was talking about in the last video that I made and what I did. I actually made a huge mistake. So if you guys want to check it out, hit the subscribe button so you can get the notification to check out what call option I made a huge mistake on. But today we're going to be talking about two stocks in my investing portfolio. So first, let's get into it. The good. Amazon. Amazon reported earnings last week, and their AWS segment sales increased 37% year over year. Last quarter, I think it was up 28% year over year. So absolutely awesome. We know they've been spending a huge and absolutely insane amount. Wall Street wants to see if it's going to pay off. And this number right here, this AWS segment, this tells us it is. And guess what? The stock got rewarded. Yep, absolutely huge move. I probably should have put this in my gambling portfolio. I thought about it at one time and I just never pulled the trigger. But anyways, I still hold it in my investing portfolio, so I'm super happy with this up move. Up over 20% on a 5-day chart. So yeah, reached all-time highs of 280 something, going absolutely amazing. This is what I thought the stock would do. So not much more to talk about there. Let's talk about the bad. Meta Platforms. All right, they also reported earnings last week. Their revenue, awesome, $60 billion. If we take a look back 2 years to Q2 2024, 30% from there. These numbers are absolutely staggering, right? 60 billion, that's 20 billion. Up from 2 years, absolutely amazing. If we look at their average price per ad year over year, up 12%. So they're becoming more and more efficient as they go along, making more money. Everything seems to be going well in that department. This business is about broken. So what's the problem? Why has the stock gone down? Well, they're spending too much and Wall Street doesn't see how it's going to be profitable for them. So a lot of the questions on the earnings call were, are you going to sell the compute that you're buying? What are you going to do with it? So they also had to incur a loss of over $3 billion, 2.4 from a legal charge, 1.2 from employee severance. They described this as a one-off. I think the employee severance pay, absolutely a one-off. The legal charge, this is the red flag I'm seeing. And this is my warning to Meta investors. And it's something that I'm actually really thinking about heavily right now. We're going to talk about that in a minute. But first, we're going to talk about their big opportunity. AI agents. Zuckerberg said at least a few times, AI agents are the way, right? This is what we're spending money on. This is what I've heard from other companies. AI agents are the next best thing in AI. So their compute bet, they're pouring massive amounts of money into infrastructure and compute, banking on a massive future return. On the earnings call, they said we could sell it for more than what it costs us. We've got many offers, but at this time, we're not going to do this. We see better opportunities in front of us. One of the things he talked was tools that could let anyone start and run an entire business right on Meta's platform. A business in a box, as he referred to it. And then he also talked about how that would make them money, from subscriptions and volume-based pricing to eventually running an auction for compute over time, similar to how they auction ad space to businesses today based on verified results. So basically, you must pay us for actual results. That sounds awesome. Who knows if this will work out? I can't wait to see the rollout. Maybe I'll even start my own business on it. All right, let's go back to the red flag I'm seeing and my warning. These legal troubles are not over. And I don't know if they'll ever be over. Just their business is just geared towards the youth, and there's lots of problems with it. It's not, a secret. Everybody knows it. So as their payouts continue to be massive, a reoccurring drag on the financials, they also have some upcoming headwinds. Management on the call explicitly warned about heavy scrutiny on youth-related issues, even citing that there were actual trials still scheduled for this year in the US. This problem isn't going away. This couple billion, that hit them this time, we just don't know what it's going to be. They're obviously making a huge amount of money, a huge amount of revenue. Their ads just keep getting better and more efficient. So for the time being, it seems okay. I'm also thinking about their wearables, their glasses. I don't see revenue coming into the future. I don't see them being profitable on it, even though I think there is light at the end of the tunnel. It's just hard to see it this time right now. So it looks to be a far, away from us. All right, guys, that's what I'm thinking on this, and I will see you on the next one. Thanks for joining me.